In this video, we're going to look at the times that day traders need to set their alarm for and why. Stay tuned. Hey traders, a very warm welcome to you. So, day traders in the UK, they need to set their alarms for these times and why. And obviously, whichever time zone you're in, just flip it. This is GMT. So, 8 o'clock in the morning. Well, hopefully you've got your alarm set before that, because 8 o'clock in the morning is the open of the FTSE, the DAX, the European market. So you need to be aware that that's happening. Hopefully you've got your research and your plan done before that, and you're not just kind of running to your screen, just waking up. But assuming you're all ready and prepared, you've had your breakfast and what have you, 8 o'clock open, ready to trade, bell goes off, you should be ready to place your trades or whatever you're going to do. Watch the market conditions, mark your levels, whatever you may be. Maybe you don't want to be trading right off the bat. Okay, 9 o'clock, that's the first hour, obviously, but it's a time when you might have as part of your trading plan something that says, you know what, I'm going to then place my trades after the first hour. Perhaps you have a strategy that says, hey, the first hour range, I'm going to mark my high, my low, whatever it may be. But the first hour is very, very useful. And it might, like I say, be a kind of watermark that you say, okay, I'm not going to get involved until that first hour goes off. So waiting for that alarm on your first hour is important. Let me just make sure that's a 1 and not an L. All right, now we get to 11 o'clock. Now, why have I got an alarm at 11 o'clock? 11 o'clock is generally when the market starts to go quiet. So I want to get my trades done, my morning setups done, or whatever I'm doing or looking for at the day done, and not wanting to be opening any new positions. No new positions. I'll put pause, you know what I'm talking about, after 11 o'clock. That's a generalization. There are times when it's really, really wild, but generally speaking, things start to wind down a little bit. It's coming up to lunchtime, people having meetings, hedge funds are having meetings, they're going out doing this, doing that. You know, a lot of the business has been done, a lot of trades have been placed, and we go into a little bit of a kind of consolidatory period or just a chug period. So generally, I won't want to open any new positions unless, of course, it's a level that I've predefined and I've kind of authorized it as a good word to use. But I'm not going to be looking for any new trades during that time, unlike during that kind of first hour, if it's an opening trade, or after the first hour, if I'm looking to capture the trend of the day. Okay, 1:30. I've kept you on your toes here because I've flicked from 12-hour clock to 24-hour clock. But 1:30. The reason I've got that, and I could stick something in there about 1 o'clock, but I don't want to boot too many alarms. We've already got quite a lot here. But 1:30 is often when data starts to come out. Jobless claims, data from the US comes out generally at 1:30 UK time. So I want to set my alarm if it's a really key data, obviously before that, so I'll be ready for the screen. And if I've got a position on, I might want to just make sure that this is not going to be really market moving data. But and it's not obviously not data every day, but I want to make sure that is, you know, I'm ready for something whenever that happens. And to be honest, even if it's not data, I want to be back at my desk, you know, in this period of time here, after that lunchtime chop where I've probably gone away from my desk, hopefully at 11, had a bit of a break, come back ready for the US session, which is about to open in 1 hour's time, which of course this one here. So that's the US bell, opening bell, 2:30 UK time. That's when everything starts in the US, opens up. We obviously will normally get a little bit of a spike in volatility and volume if we're trading the European indices, or of course, if you're diverting your attention over to the US, you want to be ready and prepared for that. Hopefully, you've done your research like the 8 o'clock open. You've done your research and you're ready to be trading and putting your levels in and your orders in and doing what you need to do as a trader before that 2:30 bell, 2:30 p.m. bell. But it pays sometimes to have that bell because often you're so engrossed in your analysis or whatever, you forget, hey, the market's open. So having that alarm there. Okay, next one I've got is 3 o'clock. And this is a double one really, because often we have data at 3 o'clock, big data coming out at that 3 o'clock time period, or often we get a trend change at 3 o'clock. This does depend on when we're trading and kind of the time you're looking at this video now when you're trading, but often you get half an hour move and then maybe an algo will give it a little bit more of a kick, or maybe you get a trend change. That might be adjusted between 3 o'clock and 3:30 depending on the kind of environment you're trading in at the moment in time. But that kind of alarm, similar to this first hour alarm, but it doubles up as a data alarm as well, because often we get data coming out. Okay, 4:30 is Europe close. I'm just going to put Euro close here. You may want another alarm just before the close. If you're specifically focused on Europe, you might want to trade something in that last half an hour, or maybe you want to be, if you've got positions on, you probably want to have the alarm a little bit before that so that you can trim your positions, adjust your positions, look at your positions, do what needs to be done. But I definitely want to know when the close is coming. I don't want to get caught out by that one. So that's my 4:30 alarm there. Then moving on now, Europe's closed, Europe's done with. I'm looking at the US session. If I'm trading the US session, this is what I want to have a look at. Now, 6 o'clock is a funny one, this. I use 6 o'clock and I look at 6 o'clock purely because often we get a bit of a trend change here. So I'm going to put a trend change. And it's kind of, you know, the middle of the day almost as well. A lot of people like the 11 o'clock hour heading off for lunch might get a bit of a chop. We often get a bit of a final spike into that 6 o'clock time period. For whatever reason it may be. It's just to kind of, again, to benchmark the day a little bit. It splits it up and I know, okay, we're kind of in the lunchtime hour here in the US, and I maybe need to be aware of this chop going on. I maybe need to adjust my positions or maybe plan my trades for the afternoon session, having all the information in front of me that I've had from the US bell and from Europe. Then I'm moving on to 8 o'clock, which is the final hour, because the market is closing in 1 hour, 8 o'clock UK time. I'm going to say, okay, I want to be aware because, like I say, I might have positions prepared or already on, or trade ideas that may mature in that final hour based on that final hour's volatility and volume and range coming in. So I definitely want to be aware of that. My alarm will go off or whatever it may be just before. Get prepared. Maybe I've taken a bit of a longer break here, maybe not, whatever the situation is. Maybe I've traded this, maybe not traded this. Maybe I've traded the early morning and not get involved, but I want to still see the final hour of the US session. If there's an opportunity there that perhaps I've decided some levels I want to do business at and they may be close. So that's the final hour. And of course, we've got the bell, closing bell here, which is at 9 o'clock US time. That's the end of trading for stocks. I obviously want to know when the bell is. Probably have that again, as with all of these, a few minutes before, just so I don't get caught. If there's a position that I know I want to close at the end of the day, I want that a little bit earlier than that 9 o'clock bell. So the bell goes off, I know I've got to just close it. I've got to open my ticket and close it. I mean, the last minute or the last 2 minutes, whatever it may be. Again, I don't want to be caught, which I have been before. I'm sure you have as well. The bell's gone and you're in a position like, oh, the bell came a little bit earlier than I was expecting. I was focused on something else and I've got this position. It's really no excuse for that. You know, having that alarm for that, so you know, hey, the bell's about to go, I need to do what I need to do. And I've included this here because this is the futures close. Optional, really. If you're trading futures, you might want to have this because that's the futures close and you get that like 15-minute period of closing. But you know what? Let's get rid of it. We don't need it on here. Reality, that's the closing bell. You should all be done by then. If you've got some kind of index positions, you've got a little bit more time to cover them and do what you need to do. But those are the main ones. Those are the ones that I tend to roll around. I might add a few and take a few away as conditions change, like the trend changes, stuff like that. Maybe lunchtime comes a bit later, comes a bit earlier. If we're very, very volatile, I might take some of them out. But generally that looks how I would set my alarms during the day trading day. All right, guys, thumbs up if you like this kind of stuff. See you next one. Take care. Goodbye.